Hello everyone, welcome back to another week of US stock market analysis outlook for the next week, the first week of May 2021. Now let us look at the S&P 500 large cap index. As we can see, the trend is still going up. However, we can see that there's a divergence on the RSI where new lower highs have been made in the market, but the price is showing higher high. Okay, this is a bearish indicator where next week the price might have a drop down. I hope it will be around this level 4400 or 4050. If it goes further down, there would be a big crash coming in. As we said last week, the MACD has been showing bearish sign. It is continuing for the next week also. The stochastic also shows a divergence, so I think that it is safe to say that there could be highly likely that for the upcoming week there would be a correction. Okay, either until 4050 level or about level 4000. Big correction. Moving on, we look at the Nasdaq 100. Again, another divergence shown by the RSI. The price is showing a double top. MACD is showing bearish sign, also stochastic showing divergence. So I think upcoming week it will break through this level, the price, going further down, maybe touching the 50 SMA trend line or around this level, 13,200. For the New York Composite Index, again divergence on the RSI, where low highs in the RSI, but the price is showing higher high. The MACD is showing crossover sign, but not that clear yet. Divergence sign is also indicated on the stochastic indicator. I would say that there could be a correction to 16,000 level, to this level. If it move further down, there would be a big crash coming in, so watch out everyone. Moving on to the Nasdaq Composite. Again, we can clearly see a divergence. Okay, market is I think barely touching new high. However, the RSI did not show any new high here, so it is most likely quite a bearish indication on the index. I would presume that the price might drop until the 50 SMA trend line to 13,600 level. Okay, if it move further down, there could be a big correction coming in. Same as last week, MACD has been showing a bearish crossover. The stochastic is also showing bearish divergence. So again, watch out for next week. On the Dow Jones, the trend is clearer. We can see that there's a bearish indication also shown by the price, but it is maintained a stagnation like I foretold last week. MACD is also showing quite a bearish trend line. Okay, now we can see if there's maybe a bullish divergence on the stochastic, where the previous low has been breached but the price has not breached. So I presume that the stochastic will move further down, either to the oversold area before going back up. Then that would be an entry to go long. But looking at S&P 500, Nasdaq Composite, the overall trend could be bearish next week. So I would not be too eager to put a long position for the upcoming week. For the Dow Jones Transportation Average Index, the trend is still looking fine, but this is the big uptrend from February until now, around 2 months, without any big correction. This is very scary, man. Also, MACD is also showing divergence. Okay, very bearish divergence here. However, there was a bullish sign last week. I predicted it will either go stagnation or slightly move upward last week. So it seems that it moved upwards because of the stimulus on infrastructure. However, since the infrastructure has not even been awarded or built or confirmed yet, this is all speculation. So if the other indices such as the S&P 500, the Nasdaq, New York Composite, Nasdaq Composite are all showing bearish signs, so I think that it is not the wise choice to enter long position on the Dow Jones. So moving on, let's see on the gold contracts. As I analyzed last week, the price is stagnation with a slight bearish sign. This week we see that the MACD is showing a bearish indication. Stochastic, nothing here. RSI showing a divergence of price. So overall, gold is still quite bearish. However, I would not trade gold currently because most of the volatility and the money is going into Bitcoin. So I presume that it could be still stagnating next week. But depending on S&P 500 and the other indices which are showing bearish sign, gold, people could flock into gold and push the price up into the 200 SMA trend line, maybe until 1800 level. Overall, I would say that better not trade gold for the upcoming week. Just stay at it is. So to conclude, for S&P 500, Nasdaq and New York Composite along with Nasdaq Composite, I am seeing the bearish sign for next week. So I don't think that we should short the market yet because I'm a long on the trader. So I hope that I would see a big correction next week, so that it will present more long position opportunities in the upcoming months. So watch out for next week, everyone. And that's it for this week analysis of the US stock market. Stay safe and bye bye.